What is good, guys? It's Ray J back with another video, and this I'm going to be talking about what's going on with Tesla, SPY, Nvda, the QQQ, and a couple of tickers out there. I'm going to break down some very big data that just came out and why it's not looking the best in my opinion, and all of this stuff could affect Tesla and all these different tickers. But before I break anything down about all this information, before I get into any more details, let me just mention a couple of things. I'm firstly not a financial planner, so take none of this as financial advice. And also, if you guys can, please check out the Moomoo link, which is down below and in the description. If you sign up for Moomoo with the link down below and deposit $100 into the account, you're guaranteed 5 free stocks plus a $50 cash reward. And the offer ends very, very soon, within 15 hours. So check it out before they run out. Anyways, let's talk about the market. How are things looking? So with Tesla and all these different tickers, I want to break down something very important. Tesla has a possible head and shoulders developing on it, and there is a good possibility of some downside coming to the market for the entirety. Now, could the market pump a little bit more before we start to see the downside? That's a possibility, or we could just start dropping from here. And I'm leaning a little bit more bearish now after what we just witnessed. So, what's going on with all this data? How are things looking? So, all the data came out. Initial jobless claims were a little bit lower than expected, unfortunately. That's not at all what the Fed wants. And then PCE data was not the greatest, in my opinion, either. So when we look at the numbers, they were technically very close to expectations. But here's the problem. PCE, which is one of the most important inflationary measures by the Fed, okay, was 3.3%, right? The forecast was 3.2%. The consensus was 3.3%. The last time this came out, last month, for the month of June, this was 3%. For the month of July, this data just came out right now, it was 3.3%. So inflation got even hotter month over month. We saw an increase compared to the previous report. Then, and this is a little bit more concerning, the core PCE, this is another inflationary measure, was 4.2%. The forecast was 4%, the consensus was 4.2%. We were expecting it to be around like 4 to 4.2%. We did get 4.2%, but remember, the last time core came out, it was 4.1%. So core was 4.1% the last time it came out. This time, and now it's 4.2%, showing signs of an increase in inflation. So inflation is starting to go up, guys. This is not good news whatsoever. And even though it technically is aligned with expectations, it's going up, and that is not good for the Fed. The Fed is becoming a little bit more incentivized to be hawkish now because of all this data. You can see right here, this person also mapped it out, right? You can see everything was hotter than what we saw previously. And then the headlines are coming out saying the Fed's preferred price gauge ticked higher as inflation fight gets tougher. So not the best of news so far. Not so gloomy August. You can see right now the market is still not in the strongest of positions, but at the end of the day, we've been pumping for the last couple of days, going higher and higher and higher. We're about to end the month of August, and we're going to see how we end up closing month over month. Now, when it comes to GDP, we saw this news earlier, right? The fact that the GDP growth was expected to be lower for the second quarter, not to mention the jobs numbers were not like the worst. There's some talk about Walmart finding different ways to attract more buyers, some new earnings involving UBS and Warren Buffett's birthday, which is awesome. So happy birthday to Warren Buffett. I think he's like 93 years old. Pretty interesting stuff. Anyways, when it comes to Tesla, I've been looking at the news. All I'm seeing is all these talks about the lawsuits, the probes, the investigations from the SEC. I was talking about this yesterday already, but I just want to make it clear that this is still going on. Nothing new whatsoever. And now we just want to talk about the charts. So I have one warning for Tesla. All the Tesla investors, remember yesterday I gave you guys a warning about PCE. Tesla's a little bit down. It's looking a little bit weaker than the market. And because PCE was technically as expected, but a little bit on the higher end, and we saw a slight increase month over month uh, compared to the previous month, Tesla has this head and shoulders like pattern. If Tesla does not break and hold at 260, this head and shoulders could be valid, and this thing could start sinking to lower levels. Now it looks more bearish in my opinion, so we're going to be watching the support at 255. If this fails, this Tesla could start sinking to even lower levels. And basically, if that fails, I think it's going to slowly downtrend it towards this 250 area. If that breaks, then Tesla could start sinking even more. When we open up, we might see Tesla kind of chop around, try to push up to 257, kind of trade a little bit around this area. In order for me to change to more bullish, I want to see it hold 260. If it fails to do so, this head and shoulders may be valid. We might see Tesla start to sink pretty quickly and come all the way down to 250, if not even lower levels, but watch 250 just to be safe. It does look a little bit more bearish because of the fact that the PCE numbers are not the best and the market pumps so much with almost no downside. That's why it is due to do something like this. Now for SPY, I called out two possibilities. I told you guys it might gap down or it may gap up. I actually just highlighted the gap up possibility. Basically, I had this drawn out yesterday. I also had a gap down and drop, but that's obviously not the case today since we know what happened. This is what I drew out from yesterday. We kind of like pop a little bit, come up to like the 453 zone, then we just start sinking. It looks like with the triple, let me just show you this, the triple bearish divergence on SPY that's developing on the 30 minutes time frame. I say this because the MACD has been declining, RSI is declining, yet the price has been going higher. That tells me that we're either going to pop a little bit more on SPY. SPY could pop a little bit more and then start dropping, or it just starts dropping from here. And it looks like it may start dropping from here. The top could be in for the temporary, the temporary top, of course, not saying like it's the only top, but we might see a very healthy pullback very, very soon. We might start to see this thing approach 450, if not 448. It is due to do that because of the fact that the data was not the best in PCE. We saw a slight increase month compared to the previous month. And we have to be very, very careful with all this data coming out. So either it pops a little bit towards 453, around the 453, then it starts dropping, in my opinion, or it could just start dropping from here all the way back down to 450, if not 448. That is where I'm leaning towards. My QQQ estimate was a little bit off on the top. I think I drew it a little bit too high. But anyways, I don't think we're gonna go all the way up to like this high right here, like all the way up to like 380. I think I exaggerated that yesterday. But anyways, that's a little bit off. But besides that, I was correct about this potentially trying to gap up or get some kind of pop. We got this pop right here off this data, but I do believe it's either going to start dropping from here all the way back down to 375 or even lower, or it could like pop a little bit and then start dropping. So it's got to be one of those two. Just like SPY, the QQQ also has a bearish divergence that has been developing. If you look at its divergence, we have this triple bearish divergence on the RSI and also the same thing on the MACD. It's a double bearish divergence. So I just want to make it clear, with these bearish divergences developing, with the market, showing signs of a reversal after pumping so much with no downside, I would not be surprised if we pump a little bit more. You could get a retest of 378, maybe higher, and then come down, or you just come down from here and the market starts sinking. I'm leaning more in that direction, even for the QQQ. I think it's going to break below, 375 or so. For Apple stock, it's the same thing. Now, I'm actually kind of in the middle with Apple because we have this unfilled gap at 190. We could technically get a pop to 190 and then start dropping, or we just start dropping from here. It's starting to show signs that's getting ready to drop from here after we pumped so much, became so overbought without any downside. So I'm not a perma bear or anything like that, guys. I'm just trying to be honest with what the chart's telling us. We have this double bearish divergence, maybe a triple. It's like a triple. Let me double check this. It's more of a triple bearish divergence on Apple. The MACD has a double bearish divergence, and we're getting a bearish crossover in the 30 minutes time frame. We are due for a slight pullback, so I do think this chart's looking a little bit more bearish. We're getting like signals of a reversal. So it could get one more pop to 188 to 190, and then it starts dropping, or it could just start dropping now all the way back down to the 186s, which could cause the market to start sinking just like this. I think Apple may lead the way, and that's why it's going to be very important to watch it. For Nvidia stock, I talked about two possibilities. Either this thing continues to pop a little bit, maintains this rising wedge, and then we end up dropping, or it could just start sinking down from here. I had this drawn out yesterday. I think that Nvidia, it could get a retest of like 495, one more little touch of 495 to 500, and then start sinking, or it might just start sinking from here in this head and shoulders formation that's somewhat slanted. And we might see Nvidia make its way back down to like 485 or even 480. I do think the odds favor that over the next 2 days, and I do think we might see a little bit of a pullback for Nvidia. I think it is due for that. If you look at the RSI and how overbaked it is what it is, guys. I know that that's not what you want to hear, but this is just a very healthy pullback because when you zoom out of the charts, right, we could be still developing like a cup and handle like formation as of right now. So just to be, as clear as possible, you're going to be watching the support right here. So I'm going to delete this wedge for the time being and then show you what level to watch for. You want to be watching this support right about here. You're going to be watching this support to see if this trend line holds or not. This is going to be our support. If this breaks, this thing could start sinking. It's going to sink to 490, and if that breaks, it's going to be sinking below the 50 EMA. A break below the 50 is going to take this thing even lower. So you're going to be watching this support very carefully. My gut tells me that there's going to be some downside coming. Completely normal though, and no surprises after the market pumped so hard with no downside. So with that said, guys, be very careful with Tesla. There's a possible head and shoulders developing. Let me just show you this one last time before I end this video. This could be developing, so I want everyone to be very, very careful. Do what you have to do, and just know that Tesla's looking a little bit weaker right now. So watch for this thing to either pop a little bit by open and start dropping, or just drop from here. All right. So sorry if I'm talking a little bit fast. I want to end this video as fast as possible to get this out there as quick as possible. And I hope everyone has the best. Thank you. Have a great day. Tesla in the market to the moon because the long term is bright despite the short term fluctuation. And peace out.